Hello, I'm John Furrier with theCUBE, episode 123 with Dave Vellante for our weekly CUBE pod. Dave, salute to you.
Johnny boy, what's happening? How you doing, man?
It's a crazy week. So many headlines, but busy 5 hours podcasting today. Big party on the show floor here at the NYSE. theCUBE Wire and the NYSE Wired brand, theCUBE Originals, we've been really kind of growing very fast. It's got 700 people on the show floor, having a huge cocktail party. Palmer Luckey, all the heavies coming in from defense, tech, crypto, Anchorage Digital, many other leaders. It's going to be wild, and it's going to be fun networking. Again, the community's growing very, very fast in tech, so it's been great, and today's just a great victory for the community to see everyone come together.
Yeah, well, was it true that Tom Brady was there?
He's on the list. He might be there
make
tonight.
it in?
We try to get him on theCUBE. I said, of course, we'd say yes to Tom Brady, and he could do some commentary on theCUBE. I'm sure he's got a lot of Silicon Valley love for theCUBE because he's from the area. He grew up in the Bay Area, as you know, and is a proud 49er fan. Loved Joe Montana. Of course, New England Patriots, our team, and legendary, of course.
He's not really a Patriots fan anymore, I hear. He's like, he doesn't have a dog in the hunt, but whatever.
Well, he's got to say that because he's on national television broadcasting. Well, look at this show, this pod, Dave, is really kind of just continuing on the theme of AI frenzy. There's a memory supercycle. I wrote a post yesterday. It's gone viral. I put it on Substack and LinkedIn, got a lot of commentary. And the enterprise ROI reckoning, that's kind of like the theme. There's still, the markets were, yesterday got crumbled. The capital markets are still white hot. A company with no product got $1 billion valuation, $1 billion seed round. And World Labs raises $1 billion. OpenAI reporting on a $100 billion raise at an $850 billion valuation. Dave, $850 billion valuation for OpenAI. This is unbelievable capital market tech intersection.
Was that pre-money or no? Was that post-money?
That was at a pre-money valuation. So
that was pre-money valuation, right?
Yeah. So
on a $100 billion raise, or is it a 750 pre?
I think it was.
Anyway, it's big.
My notes say 850 pre-money, 100 billion. Who cares? There's an extra 100 billion.
Right, yeah, you're right. But and then Nvidia's taken 30 billion of that round, and everybody's like giving them crap for not doing 100 billion. They never said they were going to do 100 billion all at once. I'm surprised they're doing 30 billion. That's a big number. I thought they'd do like maybe in $10 billion tranches. 30 billion from Nvidia.
The capital markets are segmenting big time because can you imagine being like, this was a traditional VC round, Dave? It's like, okay, Dave Vellante Ventures, your pro rata's up. Would you like to take, how much of that 100 billion do you want? Like, they don't even have 100 billion.
Oh, you want your pro rata to be 5 billion.
It's like the capital markets with the CapEx raises, you always use the barbell analogy. We are living in a capital markets that's completely barbelled out. You either need massive CapEx on one hand, or you don't need much on the other, and you got rapid growth, but yet you're a supplier, and Nvidia's the bar, right, between them both. So it's a real discussion that nobody's talking about in Silicon Valley and New York, is that a lot of these later stage rounds, Dave, the VCs can't even afford the pro rata, and so if you're a company, where are you going to get the money from? You got to get it from either big money players or strategic investors, that isn't dumb money anymore. They're primary money. And so, you know, the old expression, VCs do a round, and then they say, let's bring in the dumb money. The corporate investors who are going to take a little bit of a return, but not anymore. That is now the strategic capital market. So 2 companies came in today raising money from Lockheed Martin on robotics, all shared interest. This is a trend that's actually happening. It's no longer dumb money. You now have partnership money. So that's tier 1 capital market action. Again, this has not been reported anywhere. This is stuff that we're seeing real time. This is a capital markets dynamic affecting the asset class of venture capital because the rounds are so big. They can't actually deploy venture capital at all because they know they can't make the pro rata. That's why these SPVs are popping up everywhere. They're selling their pro rata rights to SPVs to fill out the round. So what do you do? So this, again, this is really interesting story.
They sell it at a premium, so they take a little lick off the cone on the.
I mean, some of these funds, they don't have the cash, and they don't want to put their entire percentage of their fund at 90% into one bet. So they can't make their pro rata. So what they do is they say, I got allocation. And then they go and put SPVs together and they raise money from other places. So again, this is just a new dynamic of the marketplace. This is the AI capital.
Are you following that Blue Owl story? Are you following that Blue Owl story?
No, which one?
They basically sold a cross section of their paper in one of their funds for 1.4 billion. Because the headline yesterday was that investors want to get their money out, especially the retail side, and they couldn't, and so they needed to create liquidity. So they sold some paper. The guy, the CEO, was on today TV saying, "No, this is good thing. We're accelerating. We're creating liquidity." Kramer kind of took him to task, not in front of the guy, but afterwards, saying, "I used to be a junk bond trader," and he's kind of like smell a rat, but. Anyway, Blue Owl, is funding a lot of these data center build-outs, right? And so,
and CoreWeave took a hit on that too. I'm picking up on it now.
Yes, and CoreWeave, I think the market's just taking everything down on sympathy, but CoreWeave, I think their data centers are funded. I don't think that. I think that was sort of a misunderstanding in the market, but still, anything that's related is down. It's like anything data center is down now, but it's like somebody's going to make money. And of course, who I think is going to make a lot of money is Nvidia. I mean, it's just.
Well, I've been following what Blue Owl does as a sector, not necessarily their mechanics, but this is the problem with these big data center deals, Dave. And here's what I have in my notes from this. And this is something that we have been covering deeply. Let's just say that I say, hey, I got a contract from Amazon or OpenAI or CoreWeave to build a data center in Lancaster. I think that was CoreWeave's place. I got a $7 billion order, just make up and say 10 billion, make the numbers work. I got a $10 billion order to build out a factory, AI factory and facility. And they go, great. They turn around and then get the contract. The visibility from the CoreWeave or Amazon, whoever's buying it, it's probably about a 1 or 2 year horizon of what they know they could use it for it, but they can't make commitments downstream. So then the risk falls to Blue Owls of the world to go finance that. And what's happened with Blue Owl is that they couldn't secure the $4 billion in debt financing. Okay, that's according to the reports that I heard. So this is not just a Blue Owl issue. This is a who takes the risk on the contract, because like when Amazon said we're going to do 50 billion in North Carolina, what does that even mean? So like, are they actually going to write a check for 50 billion? No, they're not going to do anything. The risk shifts to the real estate side. So this is where the market's going to sort itself out. And this is where Nvidia comes in, because they are motivated.
Well, that's the thing, John. I mean, everybody's taking down these data center, plays, all the hyperscalers of the alphabet, obviously they're doing well, but they're sort of down on Amazon because they're spending so much, down on Microsoft because of the SaaS attack. And when I looked at Amazon's financials when the last earnings, flipping through their charts, and I was like, whoa, look at that free cash flow. Ouch. But I get that. But look, if you remember when Bezos was taking on all this debt way back when he was building Amazon, and people were freaking out about it. And, same thing with Uber, although Uber's kind of in the tanks right now. But I mean, people look back on that and go, wow, he was right. And so look, either you think this AI thing is going to be real, and you think that guys like Jassy and Satya and others have visibility on it, or you think they don't and you're running. But this could be a massive buying opportunity. But either way, John, who wins? No matter what, it's like Nvidia, right? I guess Nvidia doesn't win if the whole thing blows up and then you don't need GPUs anymore. But I just don't see that happening, especially because they're going to keep lowering the cost per token. I sound like a broken record, and so. Jensen's law, buy more, make more, or save more, is still in play, unless this whole thing is BS, which I don't think it is.
Well, the question is, will the AI data center bubble burst? And that's the question with the Blue Owl deal. I don't think it will. However, no one's factoring in. I had conversations all week here in our AI factory series around why can't you have metro factories and leverage all the facilities in, say, New York or a metro area and leverage grid computing techniques to manage energy? So there are companies we talk to that are looking at that. But that's not even on the radar because everyone thinks I got to build these honking data centers in these places like Texas and Silicon Sands and, say, Phoenix. That we certainly need them, there's demand for it, but you can't discount that it may not be a winner-take-all data center game, on that maybe it's a little bit overinflated. So that's what some are saying. I think we do need these data centers. I think there will be ways to get energy, whether it's using grid techniques in major metro areas or going to space, all these kinds of things. So we'll see, right? I mean, we don't know, but I think, one, there's demand for data centers, but the question is, where's the froth line on this? And where's the irrationality on this? Yeah, I mean, keep buying space if you're AWS, go to North Carolina, CoreWeave needs space. So I think Blue Owl just got over their skis looking at the data here, and they got their, they give me this, I'll give you that. They couldn't get the debt financing. Where's the cash? No money. How much money really changed hands? You don't. So it's all about on the back end. This is where the deals are. So we'll see. I mean, we'll see what happens. I mean, I don't know. I mean, all I know is that the froth on AI is so high. Okay, you had and you have a memory shortage. I wrote about it yesterday on my post on SiliconANGLE. Supercycle in memory happening, and all the demand and funding. The control point's AI, right? So this is where the AI flood is happening, and the question is it a crack in the foundation, or just reality? That to me is like, are the expectations embedded in the valuations, right? So what's the expectation on revenue? Dave, are memory chips the new oil, right? So AI bottlenecks equal memory is tied to memory bandwidth. We see that with Nvidia. We're going to hear more about that at GTC.
Well, it's interesting. I mean, SK Hynix and Micron, Samsung, obviously crushing it. It's funny, right? I mean, I remember talking to Sanjay Mehrotra several years ago. Micron had an event. They had theCUBE there. We did a couple years in a row. He's pretty awesome. And I was like, bro, this is a cyclical business. It's always been a cyclical business. And he's like, listen, Dave, we're addressing that. We're not fully there yet, but we're smoothing things out. And it became kind of a cyclical business again. And now they're like, there's so much demand. I still believe that memory is ultimately going to catch up, right? I mean, I don't care what silicon you are, even Nvidia. Eventually, it becomes cyclical.
The constraint is memory, right? HBM. There's going to be some flash in there. The architectures. If you look at the data on the industry, it's a 9x industry expansion in 4 years. Okay, if you look at the memory semiconductor industry bottoming out roughly around 2023, it was about an $85 billion to $90 billion in revenue. Okay, according to the research we have and others like Ben at Creative Strategies and others. By 2027, it's tracking to 800 billion to 850, Dave. That's massive. 9-fold expansion in 4 years. No segment in chip history has ever scaled that fast and by that size. 2026 alone is going to reach 550 billion. So the entire semiconductor market is historically hovering around memory like it was back in the old PC days. So it's so core. That's why Micron stock is up. This is not a cyclical bounce. It's structural inversion.
Well, and it's because of the AI factories build out, I mean.
It's the arms race. Yes. The AI capital build out, his factories is memory bounded, Dave. Think about it. Meta, OpenAI, Anthropic, they're rolling out shit so fast.
Well,
where are they going to
so
everyone's building agents, everyone's training models, everyone wants super intelligence.
Look at AI factory spend went from essentially zero, in 2022 to, it's going to be over $1 trillion by the end of the decade. I mean, it's just, and Nvidia is going to get, a very large percentage of that, no question.
I mean, the constraints now memory. So we'll see what happens at GTC. I'm very curious to get that. But I wrote a big piece on this, got some good comments on LinkedIn and Substack. I titled it, I used our Supercycle term, The memory supercycle is here, and the AI funding frenzy is pouring fuel on it.
I'm laughing because I was on an NDA call the other day with Vast Data, because we're going out to Utah next week to do their show, and it's going to be good. Their first customer event. They do it in Utah, which is, Vast is cool. They don't do stuff in Vegas. It's like when UiPath did their first event. It was down in the Fontainebleau, in Miami. I mean, it's a cool venue. Anyway, it was an NDA thing, so I can't talk about it too much. But Supercloud came up, and it lives. So,
wait a minute, did they actually use the
stay
term
tuned.
Supercloud?
No, but what they just, well, I can't say, but no.
Okay, all right. All right, I think I just understood what's happening. Thank you for sharing that.
Supercloud lives. Let me just say that. Supercloud lives.
Oh, you mean
that's not
NDA? Layer
between
so an abstraction layer between clouds having storage
you got
and
it,
resource
bro.
across all resources?
You got it, exactly.
Tied to supercomputing capability, workloads, and AI workloads moving in a hybrid fashion? I wonder.
Not multi-cloud. Not multi-cloud.
It's Supercloud. In a super cycle.
That's funny. Well, what about the, did you see the GDP print today and the inflation print and the tariff news? Did you see that?
I was interviewing all day. All I saw was Trump
and
so the Olympics on TV.
So the Supreme Court thumbs down to the Trump tariffs. They said, no go. You overstepped your authority. The GDP came in under 2%, real GDP, and the inflation number was a little hot. So bad day for America, I guess.
But Trump was on TV saying he's gonna oppose another 15%. So he's like not backing down. So he's just flipping the middle finger at the.
He doesn't care about the Constitution, balance of powers. None of that matters.
The tech stocks were up a little bit this morning after that Supreme Court ruling, Dave.
I presume it's because they think there's a rate cut coming, right? Because of the soft GDP number. GDP number was like 1.6. Yeah, it was like 1.6 today. Let me.
I was talking to a couple of guests.
1.4. 1.4 today. So I mean, that's off of 4.4, right? In the third quarter. So
on the Trump thing, Dave, I was talking to a couple of manufacturing people today. We're talking about the U.S. competitiveness, et cetera, and the comment was, either way in the tariffs, it's going to force America to be better, right? So I think the sentiment in the tech community here in capital markets is, no matter which way those tariffs go, it doesn't change the game here in the United States of America, which is we have to up our game and have supremacy in manufacturing. It's something you talk about all the time. And then I decided, okay, I'm going to walk down on the floor and see some of the entrepreneurs that were in the building for this event and say hi. And I'm walking by, I see Trump on TV in in the trader stations, and I hear him say, "I saved Intel." He said that on TV.
He's got a point.
I couldn't hold back, and I said, "Fuck that! You didn't save Intel in the trailer." What do you mean you didn't save Intel? I'm like, oh, talk to Dave Vellante. He's got the whole book.
Well, I mean, he tried to fire Lip-Bu-Tan, and then gave him a cash injection, so that didn't hurt the stock. But I think
he saved Intel.
Well, he gets some of them. He gets So on the save Intel slice, I would say Lip-Bu-Tan gets like 99%, and Trump gets maybe 1%. I don't know, maybe a little bit more of that slice. But I think Lip-Bu deserves a little bit more of the credit. And then you know how I feel about it. Intel's still got some work to do. But we're all pulling for him. Ben Baharin, who's top analyst, you just sort of quoted him, Creative Strategies. He's still pretty high on Intel. I can't tell if it's because he does so much business with Intel, but I feel like he's an honest broker. And when I've sort of, I say debate with him. I mean, Ben knows his stuff when it comes to silicon. But his argument is always, look, Dave, I think my assumption is they're going to get a wafer scale customer for their foundry. And if they do that, then, I'll be a lot more optimistic. But right now I'm still looking at them saying, wow, where's the wafer scale customer? Where's the volume coming? Where's the volume coming for 14A? And it's just, it's unclear. So they're not saved yet. Let me just put it that way. But what Lip-Bu did, which was right, is he slashed cost. That saved Intel. Otherwise, they would have gone bankrupt. And it was clear. We've been saying that for how long? How many years have we been saying that? So finally, he made that move. So that's what saved Intel. Now, will Intel become, a leading advanced manufacturer and competitive with TSM? It's a long ways off. We know. So
the funding news is the AI startups are getting massive amounts of funding. You'll see it every day. Billion-dollar valuation with no product market fit. The enterprise reality check was a big theme this week. I'd love to get your thoughts on that. You mentioned last time in your breaking analysis prediction was this is the year of the enterprise ROI. You guys are predicting that. That was key. I saw that, and all the analysts were kind of weighing in with their perspectives. Is selling AI software going to be harder or easier? Do the buying cycles go longer?
This one is interesting.
Forced adoption is a big topic going on here.
Well,
I wrote a piece on the coding wedge, orchestration layer, control plane dominance between.
I saw that.
Strategy between OpenAI and Anthropic. One's going horizontal, one's going vertical. I mean, this is the reality game of agents, Dave. What's your take on this?
So, first of all, everybody's just saying, "Oh, so you sell SaaS?" That used to be, "Oh, SaaS, good marginal economics." Now it's like, "Oh, SaaS, AI is going to kill you." And so I think we've got to be a little bit more circumspect than that. And so I would say this. First of all, I would go to cybersecurity. So Palo Alto got hurt this week. CrowdStrike got hurt this week. And it seems to me that those guys have a moat with their data and their threat intelligence. And so they're different from, say, like Salesforce, which I still like Salesforce long term, but they're going through a transition, so it makes it difficult. So I think that the enterprise SaaS companies, the business software companies, are much, much different than security companies with the SaaS model. So that's sort of number one. Number two is, I think what's going on is that people are looking at the valuations of SaaS companies and saying, well, and I'm not even sure they've thought this through, but this is my thinking is, if I got to pay cloud cost of goods sold, now I got to pay token cost of goods sold, my marginal economics just got worse. I think the thesis of the investors today is, AI is going to just wipe out these software companies. I don't believe that. I do think there's a different argument to make around the economics of software, which are changing, and nobody seems to be talking about that. And you follow me on this, right? I mean, You're going to pay for token costs. But so my feeling on this, John, is one, if you can infuse AI into your products, and two, show that it's incremental to your business and can replace the seat-based licensing, and then three, if you can do more volume because you're expanding the TAM, and four, if you can figure out outcome-based pricing, meaning I can help companies scale without labor, then these software companies, at these levels are going to be undervalued. But not every software company is going to be able to do that. And I think you're going to see a lot of, you remember Manugistics and JDE and those software companies that got consolidated into whatever, Infor and Blue Yonder and Salesforce and Oracle, Siebel, got gobbled up. There's going to be a lot of M&A for these software companies that don't make it through. But I do think that Palantir, SAP, we'll see about Workday. Workday's kind of interesting. You saw Anil's back in the driver's seat. But I do think Palantir, SAP, I think Oracle, I think Salesforce, I think ServiceNow, I think these companies are going to do well in this AI era. And
I asked the co-founder of Nest who came on theCUBE. He's got this new venture called Mills, really clever. He's been a CUBE alumni, he's a great commentator, he's got the historical perspective. He's one of us, he's about our age. He's seen the historian view like we do. He had a great comment. I asked him about what you were just talking about, and he said he agreed that if there's a data moat and things in system of record that we kind of laid out in the post I wrote on the SaaS populace and the reshuffling that's happening. But he's like, I'm like, and my thesis was Salesforce is never going to go away. No one's going to build Salesforce or OpenTable, and these SaaS apps are going to stay around. I asked him the question, what do you think about SaaS? And his answer was very, very simple. He goes, you ever hear of Blockbuster, Netflix, iPod, iPhone? And he goes, Nokia, BlackBerry. And his point was, we're overthinking, he didn't say this, but my takeaway, everyone's overthinking it. But his point was, classic innovator's dilemma, if you don't cannibalize your own. And he then went on to share a story about Steve Jobs, because he worked with Steve Jobs on the iPhone. The iPod was the #1 product revenue, okay, when they started working on the iPhone. And Steve Jobs demanded that we do it because he felt if they didn't do it, someone else would. And they had to kill their iPod business and bundle it into the iPhone as a feature. Do you see anyone with iPods these days? Young people probably don't even know what an iPod is.
I got an iPod with a spinning disc. There's a 2.5-inch spinning disc in there.
The original wheel. I kept all my. I got like a garage of like.
Yeah, that thing's awesome.
Devices. I got every iPhone.
Wait, so they're saying they had to cannibalize their own business?
Yeah, and so he's like, these companies that are facing this question that you were just talking about, Salesforce, he goes, the core question is, do they move to create the value and better product use case for their customer? Because why would they lose? So, hand waving, data mode doesn't change the game that the iPhone was better product than the iPod and the existing phone guys. So you just got to, this is the classic skate to where the puck is. So his point was, if you're under threat as a SaaS company, you have two choices. Figure out how to be in that next spot and be better for the customer. The expectations, how they interface. In this case, AI is absolutely prompt, front end, easier to do coding. He said coding marginal cost will go to 0 eventually,
right,
but the value won't. So he's like, he said, and I'm like, that's a really good frame, thinking differently. So his point was, don't be Blockbuster and don't be Nokia or RIM or BlackBerry. Be the iPhone to your own iPod. And that was like very simple construct. Hey, Salesforce, and that's what Salesforce is doing, by the way. They're leaning in.
Well, here's what I say about Salesforce. I mean, they have the sort of a similar problem and opportunity that Oracle had, because everybody hates their pricing, because their pricing sucks, right? I mean, they seat-based pricing, they lock you in, they force you to take it, use it or lose it kind of thing, and people are, they don't like their price, and they just raise prices every year. Having said that, they got people locked in, and they're transitioning the model. I think their near-term problem was they tried to do their own model, and now you've got Anthropic and OpenAI and Gemini just smoking any of your own models.
Well,
and
I would answer that by saying that's the same dogmatic view that Apple could have taken with iPod and said,
well, yeah, but hold on, let me finish.
We're making so much money on our pricing.
No, but let me finish. But I think Salesforce realizes that they've got to transition, just like Oracle did. And even though people might be pissed, to this day, you hear people say, remember Insick Ray? Yeah, you lost me at Oracle. And so, but look at Oracle and look at how well they've done over the years.
They're listening on the pod.
Yeah, so inside baseball, I know. But so I think Salesforce is making that transition specifically because they're making the investments in the engineering.
Why does Oracle stay around after they should have been tackled dead many times? And it wasn't a massive shift.
They shouldn't have been. Well, first of all, they did Fusion. That Larry, when he was getting, disintermediated by BEA, they said, we got to do Fusion, we got to do the integration. They spent 10 years and billions of dollars doing Fusion, integrating, their apps, number one. Number two, they had database. They kept investing in database. They've got a great database. They own transactions. The only other company that can compete with Oracle from a, transactional database standpoint is truly, is IBM with mainframe. I mean, there are others that have great products, but they just don't have the footprint. And Larry Ellison kept investing. I've always said the Sun acquisition was genius because they could now build their own clouds and they have their own control over the hardware and the software. So they integrated that together. And I think, look, in this business, if you have a founder that's a founder CEO that's still with the company that values R&D, and has balls like Larry does, and understands the market, they're gonna do well, and it's been amazing. So, I don't know. Would you bet against Larry right now? What he's doing with AI?
The question is, in normal market conditions, Oracle's pricing, their lock-in, what do you want to call it, their competitive advantage, those are normal, steady state kind of market trends. But when you have these market shifts, like Blockbuster to Netflix was essentially internet mail order or mail order. Dell was going direct with mail order. So, remember Netflix started as basically stuffing DVDs and envelopes and mailing.
I know. I used to write about it. But they had data. They had good data. Even then, they had good data. But why didn't the cloud kill Oracle?
Because Oracle got out front and said our clients want, and they
it took them a while.
Data. They got Exadata. They had Fusion, like you said, and they created a replicable experience. They probably lost a lot of business that they could have had upside onto Amazon on the database side, but they weren't put out of business. It wasn't an extinction event, although it could have been.
Okay, but let me say it this way: they had a highly differentiated strategy. That's why Oracle is where it is. And, I mean, look, let's face it. I mean, I love Dell and HPE and Supermicro, all those guys. But, compared to Oracle and Oracle's, margin business, they get the hardware and the software together. And that's where, Nvidia obviously has an advantage today. So Oracle's strategy was always highly differentiated. They didn't just go copy the cloud. They didn't, run away from hardware. They actually leaned into it. And, they did the work on the R&D side and the engineering side.
So what's interesting to see next week's earnings, I'm just going to run down the earnings for next week. You got Nvidia, Salesforce, Dell, Workday, HP, and CoreWeave. Why I pulled those out of the hat was, one, you just mentioned Workday, which is good, but it does have a sign and analysis. So here's what I'm going to watch for. I want to get your reaction. Those are the names: Nvidia, Salesforce, Dell, Workday, HP, and CoreWeave. The memory commentary. What are they going to talk about memory? So Nvidia, what are they going to say about memory? AI revenue segmentation. Where's the revenue coming from? Enterprise AI conversion rates, and then the CapEx outlook. What other variables would you look at for those companies? I think that's a cross-section of, is there a memory constraint? We'll see that in Nvidia. CapEx outlook, we'll see that with Dell, CoreWeave, because Dell supplies factories to CoreWeave and others, and a little bit of Nvidia. And then the AI revenue from Salesforce, Workday, HP, and then what's the conversion rates? What's the uptake? So this is to your ROI question, but also a little bit of infrastructure vibe. What signals are you looking for in those earnings? Did I miss anything? Or what would you add?
So I would say, I think your memory is the big one, right? Because if people are going to slow down orders because they can't get memory, or that's a constraint, that's a problem. But I don't see that happening, because I think the opposite happening. People are just lining up with orders because they want to make sure they have allocation. So you saw, like, Meta wants 1 million GPUs. X obviously wants 1 million GPUs, right? OpenAI just got getting $100 billion. Clearly, Sam Altman sees compute as the main constraint, along with memory. So I'll be looking for that. I just think I expect Jensen to reaffirm the demand, number one. Number two, I expect him to talk about the GB300 ramp, because we know the GB200s had real difficulty. People didn't fully understand how to utilize them. They were melting down. My words. That's not technically true, but they were high failure rates because people, there was a learning curve. Now they're on that with the GB300s. I'm hoping that we hear that they're doing much better, and I'm hoping we hear about the Vera Rubin ramp, which is going to dramatically lower cost per token, like by 10x, 1/10 the cost per token. So I'm hoping that we get some metrics on that. Those are the big things that I'll be looking for, in addition to, are they preserving their gross margin? Yes, they will, because they can. And, they're hitting their numbers, and are they optimistic about, the next quarter and the future? I think they will be. I'd be shocked if they're not.
Well, we have a huge couple of weeks coming up, and I want to get your thoughts. We've got MWC event where we'll be talking a lot about hyper-converged infrastructure, and I got great signaling from more data from another week of interviews here. There is a lot of smart people that have strong distributed computing backgrounds that are saying that if the telco infrastructure providers and the carriers don't jump on this hyperconvergence where they can collapse the wireless side of it and then work with Nvidia or whoever for AI factories, they're going to miss it. And the general commentary is satellite and Elon's going to take territory on that. So, I think this is the last stand for telcos, Dave. That's going to be my narrative at MWC, because
the last stand for telcos. They better get it this time. I don't know. I feel like their last stand could last another 100 years. Right.
if they don't monetize the network, how are they going to last?
Connectivity. They charge for connectivity. You know, it's like the guy that, you know, you ever arm wrestle somebody that maybe wasn't stronger than you were, but you couldn't beat him because he just had that, you know, you can't put him down, you know? And he couldn't beat you, but you couldn't put him down. That's like the telcos. You know, they can't figure out the monetization, but you can't knock them out because you need them.
Yeah,
right?
So here's what I'd say to that. They're arm wrestling, and then Elon's going to come in with judo and kill them. You know, so like I think it's this different game. I mean, think about it. I was just talking to some crypto guys. So like on the banking side, if you look at Anchorage Digital, they have no business being a bank. Okay, Palmer Luckey's in here promoting his new bank. He's creating a bank to service the tech companies. Okay, so that's because everyone got debanked. It was debanking 1.0, which was all the bad actors. Debanking 2.0 was any crypto company. It's a dragnet. And then the third wave was now like, do your own bank. And it's hard to be a bank. So now the government is actually giving charters. So Anchorage Digital is a super important company. And why didn't the bank do that? That's what the telcos are facing. If they don't do it, somebody else will.
But
who's going to bring that?
I remember Bob Metcalf, you know, the inventor of Ethernet. He used to say to us, we were with him we were at IDC and IDG. He always said, "Wired is better than wireless." At some point, you need wires. A telco's got wires. You know?
Got facilities where we can put AI factories with power and connectivity, and they power the wireless piece. So
there's some cool shit coming out at MWC. It's more NDA. There's some really cool, I'll just call it equipment that is, to your point, the hyper-converged edge. You know how you've been talking about that for a long time? Yeah. You're gonna see that. I can't wait because I've been having a bunch of NDA sessions this week, you know, MWC previews. You're going to be like, Dave, I told you. It's going to be so obvious.
Yeah, we have proprietary research too. I mean, we have done a lot of NDA, both of us, and I think, you know, you're looking at some of the supplier side, but if you look at some of the entrepreneurial side where I've been digging in, the wireless, mainly the wireless side, because that's where the spectrum is, and unlicensed spectrum. But the work we're doing with Nvidia and digging into Nvidia, if you just connect a factory, the telcos have the facilities. They have this old switches, you put in the new, you put where the old switches, where you put a factory, they'll manage everything. So it's a no-brainer. The question is, will they have the ability to do it? Right, that's going to be the question. This is about culture and execution. Everything's in place. Massive power's there, the energy's there, they got the connectivity, every single tower, network switches, there's a lot of technical language and what we call these things from a hardware standpoint. And the question is, will they leverage it? That's going to be cultural. And if they don't, someone like an Elon Musk or an AWS with their space strategy will come in with a connectivity layer that just makes it better. Again, that's why this iPhone, iPod moment, Netflix, Blockbuster, if there could be an alternative wireless and then wireline connectivity package that could come out for the first time, things like Starlink point to a direct threat to telcos directly. So the arm wrestling game's changed. So, you know, I totally agree with your point. They've kind of hung around because who's going to step up to the plate and compete? The CapEx is massive in the trillions of dollars.
So Starlink and Kuiper, right? Amazon's got Kuiper. What's your thoughts on the rollout there? I mean, we're talking like 5 years. There'll be sort of equivalent coverage of the.
No, I think in less than 5 years with AI factories, you can see massive. Look what Nvidia is accelerating on the computing side and now quantum. You would see probably less than 5 years full hyper-converged wireless networks, meaning we as users would take our phones. I use AT&T on this phone. My other phone is Telco, as a T-Mobile. It doesn't matter which service I'm in. I go to a network. The AI factory figures out who I am. It will only work if AT&T as the carrier buys into it and plugs a factory into their network, their base stations, and says, oh, there's John. They have all the data for me. And then go, oh, what's John's agent doing? What's his model say? And then AI could be applied to things I want for hyper-personalization, give them access to my VLANs, my home computer. I can create massive unlock of use cases that never technically could be possible.
So isn't that their arm wrestle then? That they just got all they have to do. They have to lean into that.
This is
That's
my
what I'm
point.
saying. They lean into that and they win. So
well, not if they don't do that. If they don't,
maybe they don't win, but they maintain.
They can win big because now they can sell services to businesses. They could create a metro cloud in New York City for home and create multi-tenant private clouds. They have all the spectrum. They're the access point. They become a transceiver, like an antenna on your Wi-Fi router. And by the way, Ethernet is built into all these. So if the radios can talk to each other in a mesh configuration, they can communicate. The backhaul is handled through Wi-Fi or Ethernet, 100 gig, whatever the speed is. And then if you have multiple, like say DGX boxes at our factories, they will be the true brains behind how the network behaves and treats the use cases. It could be agents, it could be human access at the edge, it could be robotics. So the edge is going to open up, because right now it's all limited by networks. And then who's got the policy? AT&T goes through this. T-Mobile has their infrastructure. It's basically siloed infrastructures. So you collapse all that and...
So this is a good MWC preview. I can't wait to have this conversation with you in Barcelona, with you and Zeus, our friend Chris Lewis. He's coming on right after we have the Chuck Robbins G2 Patel. G2 is going to be on. But yeah, so I mean, yeah, the big week coming up. I mean, you saw Palo Alto this week. I think that their quarter was actually much better. I think the CyberArk acquisition, the inorganic stuff that they're doing, is taking the margins down a little bit, and people freaked out about it. But their inorganic business is growing, and their NRR on their inorganic stuff. So my point is, cybersecurity to me is different than the regular sort of enterprise SaaS. I think Nvidia demand we're gonna see that next week. This whole Blue Owl stuff, but if Oracle can fund its data centers, which I'm sure it can, and CoreWeave has its data centers funded, and guys like Crusoe and the other are supporting the neo clouds. That's all happening, and I think by June you're going to start to see some real enterprise ROI show up in the income statements of guys like Walmart and JP Morgan and some of these big conglomerates. We're going to start to see productivity out of these firms, and I think that's what's going to bring this AI trade back. But right now we're in a little bit of a rotation. It's a good thing. I think.
I see some behavior that's going to be reined in, but I don't see any macro things broken. And the macro demand's high, consolidation's happening for sure. There's still demand for AI. Look at the arms race you pointed out. But yeah, I mean, it's not collapsing at all. But I think the memory is definitely a core issue. Supply chain could kind of hurt things, but the momentum's too big. But Dave, I got to run down to this event to see Tom Brady.
Have fun.
If he's there.
Yeah.
And we got RSA right around the corner too. Let's get next pod. Let's unpack RSA and Nvidia, because those are the two shows happening that's getting a lot of interest. I mean, I had 4 or 5 conversations today about TheCUBE at RSA, CUBE and GTC. There's a lot of interest. We're having a big event on Sunday in Palo Alto, and then we're going to attend the the NYSE party that Brian Bauman's putting up with Wired. So
I got to figure out if I'm going to go out to that. Right now, I'm getting in later on Sunday. Should I change my flights? Get out there earlier?
I would for sure. Yeah, I am. Yeah. Nvidia's doing great. I can't wait to see that show.
Are you going to be there the whole week? Are you going to be in Palo Alto for the week? You're going to be there Thursday?
Yep.
I got some stuff for you to do in Palo Alto for me on Thursday if you're there.
Yeah, I think if the show ends technically Thursday morning, if I believe correctly.
I'm flying back Thursday, but if you're going to be in Palo Alto, you got to do a hit for me. So.
No problem. I'll inhale.
Good. Awesome. Thank you.
Dave, we'll see you next time. I'm going to run down, schmooze.
All right. Yeah, enjoy.
All right. Thanks, everybody.
Yeah. Bye, everybody. Have a good weekend.